Pakistani rupee dipped by 1.2% to 243 against the US dollar on January 25th. This happened after the foreign exchange companies lifted a self-imposed cap on the selling and buying of dollars in the open market. The price cap created a black market offering better returns, stifling inflows from official channels and reducing remittances from Pakistanis abroad.
जो हमने कैप लगाया हुआ था डॉलर को, हमारी ख्याल था कि डॉलर का रेट गिरेगा और लोग सस्ता बेचेंगे, हम सस्ता बेचने के काबिल हो सकें, लेकिन लोग महंगा बेच रहे हैं ब्लैक मार्केट में जाके। किसी बोतल के ऊपर कोई आप कहते हैं ना मैंने कैप लगा दिया, उसका ढकना लगा दिया, तो ये डॉलर का जिन था इसको हमने बोतल में बंद किया हुआ था, लेकिन आप मजबूरन वो बोतल को तोड़ने की कोशिश कर रहा था और ब्लैक मार्केट वजूद में आ गई थी। तो ये हमने कैप हटाया, अब डॉलर ज़ाहिर है बाहर निकलेगा तो रेट एक दफ़ा बढ़ेगा, लेकिन बढ़ने के बाद फिर वापस कम भी होगा।
The rupee's official value has depreciated by over 11% against the US dollar since July 2022. Before the cap was removed, the market eyed three different rates to assess its value. The SBP's official rate, the one assessed by the foreign exchange companies, and the black market rates.
Make that it's about 35 rupees, but it's from 230 to 265 or something. This means it's about 12-13%. So it's better to talk in percentage terms to have context. And the reason for the decline is because the rate of the dollar was kept artificial in the interbank market. As you must have seen that in the open market, the rate was something higher, and it was forced at 240. But this wasn't working. But there was another market, which is the black market, where the rate moved up to 260 and all that. And the gap was just growing. And because of that gap, there are many repercussions. One, the remittances which are being officially sent by through the official channels are declining, and they've been moving towards the informal Hundi Hawala channel. So as you see, that remittances peaked at 3 billion per month somewhere last year, and in December it was $2 billion, and it is expected to be further declined by 10 to 15% conservatively in January. Then the export proceeds are being slowed down. Exporters are have the allowance of keep dollars outside Pakistan for certain period of time, and they are fully exercising that limit in anticipation of the PKR to depreciate against the dollar. And then this is the bone of the contention between the IMF and Pakistan, as IMF, the first line of the extended finance facility, the program of IMF which we are in, is about the flexible and market-based exchange rate. And so that was achieved, as you remember, that in July 2019. And now, in the past few months, with the new finance minister, Dar took over, the PKR was again, pegged and artificially kept at a level. So this was level, and since there was no supply of dollars from the SPP due to the falling reserves, so the transactions in the interbank market were restricted. State Bank was becoming effectively the broker of the last resort, and they were broking the deal between the banks and LCs opening were really hampered and all that. So all those things culminated into a crisis. And then without IMF, economic default and widespread shortages are inevitable. So the government decided to go back to the IMF, and the first step to take is to correct the value of the currency in the interbank market. And you've seen that the currency has moved from 231, and as we are talking, the last rate was 264, and let's see where it settles, but I think it will go up around 270 or something, and then there's some selling coming from the exporters, and the remittances may pour in, and there's some selling may come in the black market as well, and that could bring the market back to 250 to 260 level, and it could sustain there for some, maybe for a few weeks or months. You cannot deny the fundamentals. I mean, the currency is based on the parity between the interest rate and the inflation with the trading partners and the world players. So inflation in Pakistan is high of 25%, and interest rates are kept not that high as compared to the other economies. So the influential differential was resulting in the pressure of the currency, and the market was demanding it. So it was bound to happen. You cannot sustain at artificial level without incurring a higher cost to the economy, which is in the long run. So yes, there are short-term trends. Yes, they'll bring more inflation, and yes, they'll result in higher petroleum and prices and electricity prices, and that they could result in further increase in the interest rate. But without correcting this, there was no solution. And even after this correction, I mean, things are not really, the economy is not out of the woods. Still, the difficulties are high because we have brought the economy at a stage in the last 1 year or so, and that it's very hard to, bounce back. So we are coming very close to the point of no return, of where very painful adjustments have to be